Monopoly has been a popular game for years, and it's easy to see why. Players get to step into the shoes of a real estate mogul, buying and selling properties to build their financial empire. But beyond the fun, there are valuable lessons about money, strategy, and finance that can be applied in real life. Today, we're going to explore some of those lessons that not only help you win the game, but also guide you in the world of finance and investing. 1. Always have cash on hand. One of the key strategies in Monopoly is maintaining cash reserves. To win the game, you need to outlast your competitors, and running out of money forces you to sell off properties at unfavorable prices. The same principle applies in the real world. During the 2008 financial crisis, for example, many people found themselves strapped for cash, leading them to sell homes and other assets at a loss. In contrast, those who had cash available were able to buy these assets at a fraction of their original value, coming out ahead when the market recovered. This highlights the importance of always having liquidity to weather financial storms. 2. Patience pays off. Monopoly isn't just about buying every property you land on. It's about patience and strategy. Rushing to acquire assets without a plan often leaves you cash poor and vulnerable. Likewise, in investing, patience is essential. Successful investors don't chase every hot trend. Take Warren Buffett, for example, who famously avoided investing in tech companies during the dot-com bubble of the late 1990s. When the bubble burst, those who had been impatient suffered massive losses, while Buffett, sticking to his strategy, came out ahead. Patience allows you to make better decisions in both games and investments. 3. Focus on cash flow. In Monopoly, the goal is to maintain cash flow by collecting rent from your properties. Interestingly, the railroads are among the best assets in the game because of their consistent returns, even if they aren't the most expensive properties. Similarly, in real-world investing, focusing on cash flow is critical. Companies that generate consistent revenue, like Coca-Cola, Apple, and Microsoft, tend to grow in value over time. Personal cash flow is also important because it helps you manage your expenses, save money, and invest in your future. 4. The most expensive assets aren't always the best many. Monopoly players set their sights on the high-rent properties like Boardwalk and Park Place, but those properties also come with high maintenance costs, and focusing solely on them can lead to financial trouble. The same is true in real life. Just because something is expensive doesn't mean it's the best investment. In fact, overpaying for high-priced assets can lead to losses. Smart investors look for value and potential growth rather than just price tags. Buying low and selling high is the key to long-term success in investing. 5. Diversify your investments. In Monopoly, having a diverse range of properties gives you multiple income streams, making you more likely to win. You might invest in smaller properties, utilities, and railroads, all of which contribute to your overall income. This concept translates directly into real-world investing. Diversifying your portfolio across different industries and asset types reduces your risk and increases your chances of steady returns. While diversification doesn't eliminate the risk of loss, it helps balance your investments, making it easier to weather market fluctuations. 6. Control your emotions. Although Monopoly money isn't real, the emotional highs and lows of the game mirror those of investing. Losing money can lead to frustration, while sudden gains can tempt you to make impulsive decisions. In real life, emotional investing, whether driven by greed, fear, or panic, can lead to poor financial decisions. Investors who let emotions guide their moves often buy when the market is high and sell when it's low, leading to losses. By keeping emotions in check and making rational decisions, you'll have a better chance of growing your wealth over time. 7. Take calculated risks. There are moments in Monopoly when taking a risk, such as buying houses even when your cash reserves are low, can pay off. especially if it means you'll soon earn rent from other players. In the real world, risk-taking is necessary for growth, but it must be done strategically. This might mean changing jobs, investing in a new venture, or taking a leap into a different market. However, it's essential to weigh your options and understand how these decisions will impact your finances. Only take risks that are well-researched and within your means to avoid financial disaster. 8. Negotiate smartly. Negotiation is a crucial skill in Monopoly. Whether you're trading properties or borrowing money, the way you negotiate with other players can make or break your game. If you're too aggressive, people won't want to deal with you. If you're too lenient, you'll end up at a disadvantage. The same is true in real life. Negotiating your salary, business deals, or financial contracts requires a careful balance. Being a skilled negotiator can boost your career, improve your business outcomes, and lead to greater financial success. 9. Take time to reflect. Sometimes in Monopoly, landing in jail can actually be a good thing. It gives you time to sit back and strategize while avoiding rent payments for a few turns. In real life, taking a break to reflect on your financial decisions can be equally beneficial. Stepping away from the day-to-day grind allows you to assess what's working and what isn't. Regularly evaluating your financial situation helps you make adjustments to your strategy and ensures you're on track to reach your goals. The lessons learned from Monopoly go far beyond the game board. From managing cash flow and making strategic investments to diversifying your assets and controlling your emotions, these principles are invaluable in both personal finance and investing. Whether you're buying properties in a game or making decisions in real life, the key is to stay patient, make informed choices, and always keep an eye on the bigger picture.